Well, hello, everyone, and welcome to the Benjamin Z. Miller Investor Networking Group. Today, we have a really nice presentation. We are going to be talking about the topic of mezzanine lending, and we're going to answer the question, is it true that mezzanine lenders are just loan sharks? Well, very good. All right, so let's go ahead and get started. And the first thing that we'll talk about is an example. In this example, I'm going to show how a mezzanine lender might make $1 million on a mezzanine loan. So I want you to imagine a situation where there's a real estate investor and he wants to purchase an apartment complex. Maybe he wants to purchase a little 15-unit, 10-unit apartment complex. Maybe he's worked out a deal to buy it for $1 million. And maybe he has gotten some seller financing where the seller will finance at favorable terms. And he has determined that he needs a rehab budget. He needs down payment money. He needs some different things in there. And he's asking for a loan of $250,000. And he is offering an 18% rate of interest. And to secure that loan, the borrower is going to do it where, because there's already a first lien in place. And let's imagine that that first lien is at a 6% rate of interest. And let's say that's for 75% of the value of that transaction. So in that example, 75% of the debt is at 6%. And then we've got the other $250,000 that's at an 18% rate. And that's the other 25% of the debt. So the blended interest rate, it blends to a weighted average cost of capital at around 10% approximately, not exactly. So that's the borrower says to the lender, listen, I'll pay you 18%. And if I don't pay you, if I get behind on payments, you can have ownership of the 11 or 15 unit apartment complex. And the borrower says, yeah, that seems good. If you're going to pay me 18%, and if you don't pay me, I can take ownership. But how am I going to get ownership? Am I going to foreclose if you don't pay? And the borrower says, no, you don't need to foreclose. It's easier than that. In the operating agreement of the holding company, I'm going to make it where you can have ownership if I don't pay you. And it's very easy. I'll do it. I'll have a lawyer do it. And you can look over everything. And that way, if at any time you're not completely happy, you can take ownership. But I'll do a good job for you. And that's how that conversation goes down. Now, let's imagine that in that example, that's how the deal was originally structured. And now let's imagine that something bad happens where maybe the borrower goes through a divorce. Maybe his wife there's a nasty divorce. And as a result, he's got a lot of his money tied up in a divorce. He's got a lot of problems going on and he doesn't have enough cash to make the payments. Or he's got some business problem or some other emergency comes up that he wasn't planning for. He goes through a financial hardship and he can't keep making the payments. In that case, the lender decides to not give the borrower more time. Maybe once or twice he gave him an extension and doesn't want to do it anymore. And he decides, I'm just going to take 100% ownership. So on that day, he has 100% ownership of this asset. Now, this asset, it was bought for $1 million, but the buyer has put so much work into it, and it was maybe at a 50% rate of occupancy, and now the occupancy rate has been increased from 50% to a much higher rate, and it is fantastic. Just 1 second here. So in this example, with that scenario, the lender is able to make a profit of $1 million because now the thing's worth $2 million. When he takes it over, he receives some payments for maybe a year or two, and now he's taken it over. He's taken the deal over, and that is how that absolutely works. So, okay, now, what is mezzanine lending? Well, when you look at mezzanine lending, you see several different things that are going on. There's senior debt. This is first lien debt that is typically at a 6% maybe rate of interest, maybe 8%, something like that. And that's a first lien. Normally that's from a bank. That's it's called senior debt. And then above that, you have mezzanine debt or equity. It's a kind of a hybrid type of debt. And that pays a higher rate of return. And then above even that, you've got preferred equity, which is a lot of times what limited partners in a real estate investment might be going. And then there's sponsor equity, which would be the down payment if the buyer is putting in a down payment. So there's mezzanine loans are typically used in business acquisition and multifamily acquisitions. It's quite common to see them there. So where is it in the capital stack? Well, usually maybe 65% would be a first lien, maybe 15% would be mezzanine, and that 15% can be more. You know, you can find some deals if it's a really good deal where the middle, amount is more. So how much can you make as a mezzanine lender? Well, let's imagine that it's a loan of $1 million. A normal banker rate might be 6%. That's on a first lien. And they would get $60,000 a year in interest, and over 5 years it would be $300,000. And then the mezzanine banker rate could be as high as 18%. So on a loan of $1 million at an 18% rate, it'd be an annual interest rate of $180,000. So you're talking a very significant amount of money. By the way, if you know someone that might be a person that has a lot of extra cash that they are thinking, what can I do with that? You are always welcome to join the Benjamin Z. Meller Commercial Broker Program, where you can get paid 1% if you bring me someone and they end up doing a deal with me. So if it's on $1 million loan, you can make $10,000 and it might only take you 15 minutes to make that introduction. You just call up and let me know who you know, then call that person and get an introduction where I can talk to them on the phone or Zoom in, and you can become a legitimate Benjamin Z. Meller broker. It is fantastic. So should mezzanine loans be in your portfolio? Well, yes, this is something where if you are not taking advantage of mezzanine loans, you are losing out on one of the most powerful sources of secured passive income available. Unique investments abound, but you kind of got to get off the beaten path. Otherwise, you're just going to get low CD rates, and we know how low those rates are. Wouldn't it be nice to work a little bit more, maybe reach out and network with some mezzanine lenders, maybe make it easy on yourself and just send an email to ben@benjaminzmeller.com and I can help you. What legal paperwork is involved? Well, there's the pledge of partnership interest. There's a document called an intercreditor agreement. And then, of course, the collateral is defined in the agreement. Typically, it might be a property or it might be a business. So these are some things that are relevant. What's an intercreditor agreement? That is just an agreement that is between two or more creditors, and it explains who's going to get paid first. So basically, it's a situation where a borrower may have more than one loan. There is often an intercreditor agreement that is between lenders. So a couple of reminders, please take the time to fill out the sign-in sheet. I think everybody here, we've already got your information. And if you have any friends or colleagues that you think would benefit or be interested in this, then invite them to come to the next meeting. Come one, come all to the Benjamin Z. Meller Investor Networking Group. Also, more fantastic news. We have a new Discord server where you can go and you can meet a lot more investors. Just join our Discord server. I am also available for mentoring. If you're listening to this on the internet and you're saying, well, that sounds good. I really wish I knew how to do that. I would love to make some money with these deals and with real estate. You should reach out. Just reach out to me. Text me, call me, send me an email, ben@benjaminzmeller.com, and I can help you with personal introductions. I can help you find money for your deals, evaluate your deals, your market, how to negotiate better. Oh, it is so much fun. And that is very good, very good. And that is how mezzanine lending works. So I'm going to go ahead and stop this recording, and then I'm going to take any questions if anyone has any questions.